Good morning. Today's the 3rd of November 2023 and I'm just going to go over my trading plan for today. Got some good levels in play, or hopefully will be in play today. On my screen is the 1 hour time frame for the MES, which is the S&P index futures. You can also look at the ES chart, which is exactly the same. The MES is the mini micros version. So let's just go into the daily. So we've got an overview and a big picture of things. So yesterday we had this big push up, and notice the volume was lower than normal as well, below average. So there was no real effort on this candle by the buyers, even though it's a big wide range candle. It was a bigger candle than the previous day as well, and you would have expected to see a bigger bar than the previous day. And so you can see we're starting to get bigger and bigger and bigger bars, but lower and lower volume, and that generally signifies a pullback, and that's kind of what I'm really watching for, a pullback. The 50 moving average is a potential area to watch for on the daily. That's 43.75 area, so I'm going to put that there so you can see it on the hourly. Happens to be the lower end of these candles, the actual bodies of the candles as well, and the tops of these candles here, and a bit of confluence in the middle. So that's an area to watch for. 43.77, 43.75 for a rejection, and we are 1, 2, 3, 4, 5 days up now, and we are quite far from the moving averages, the 20, the 200, the 8, and although we're below the 50, we are due a bit of a pullback. Whether we're going to see a fake breakout of this trend line, we will know today if we put in the tail and then the body, and that could signify a reversal as well. So that's something to watch for. Okay, so let's go into the hourly and get some levels. So we've got this hourly area of supply, which is last time we was there we had a big reaction. So the sellers came in and we sold off quite big time. So I'm watching 43.67.75 for a rejection. In fact, I'm looking for a rejection candle in this entire area. And if we do rally and we break through, then I'm watching this 43.77.50 for a rejection as well. And that's based on the daily chart. So we've got two areas, and you can see on the volume control we've got quite a big congested area of volume around here as well. And where's the point control? The point control is not until we get down here. I will tidy up my chart, I think, at the weekend, because it's getting a bit messy, and I'll just probably work more with supply and demand zones rather than have lots of. So I've got supply and demand zones, which is the red and green, and also I've got areas on the chart which is daily, areas on the yellow solid line, and the yellow dotted line is the hourly levels. So it is a bit messy. I might even write a control actually, which will be better where I can put my levels in, and it gives me, yeah, that's not the point. I was not even thinking about doing a control. It lets me put supply and demand levels and support and resistance levels in, but they actually show me how thick the candle is, or how transparent it is. It will show me how important those levels are. So that's something I might work on. I can do it manually at the moment, which is kind of what I have been doing, but it's a bit of a pain. Okay, so that's my first level, 43.67 to 43.77. That's a preferred entry up here. We want to see a big push by the buyers. I've not looked at level 2 today, so I don't know what level 2 is looking like, but I presume we're going to have lots of sellers sitting around in that area. We've got a demand zone back down here as well. So you can see we poked through to the top of this steeper trend line, and we saw this big reaction, a big rejection down. So I'm going to be watching 42.90 for a potential bounce. And I've one more bounce there, which is high risk as well, and that's the bounce off of yesterday's highs or the top of this trend line. So a break and retest long is a potential, but that's higher risk because we're so extended, and we could just be setting up a fake out and a shoulder and then back down potentially. You remember I called this shoulder, this was a good head and shoulders. I called this head and shoulders pattern while we're still forming the head, so we haven't even got anywhere near to the right shoulder. This is not a good defined one, but I can see this is coming into an area of resistance, like we had when we came into this area of resistance as well. And we've got another level as well, which we rejected. So potentially we could see a head and shoulders pattern forming, but again, we won't know that. Won't know that for at least a few days. So just to recap my levels, I'm watching for a rejection in this area of supply. 43, 67, 75 is the top end of that supply area. We may be doing the rejection right now. If we rally, then I'm watching 43, 77, 54 rejection. I do quite like the continuation of this trend, even though we are quite extended. So if we do come back down to 43.50 area, no, 43.40 area I meant, sorry, then potentially I'm looking for a bounce as well. It's a tough one because we're so extended, and normally I say go with the trend and we might see a big push up, but we've got this overhead resistance as well. So I'm going to treat today probably as a scalping day for both shorts and longs, because we need to get some better levels. Okay, so that's it really. If we see a big sell-off, then obviously I'm watching down here 42.90, and this entire area is a demand area as well. So, and we've got a point of control here, so this is where the most condensed volume area is. So we could see a potential bounce from that area, which is 42.60. Okay, so looking at SPY, probably very similar. That rejection is even more defined. Look at that. So bounce is rejected off of daily level 433.25. I'll zoom in. It's probably rejected. Look at that, right to it as well. So that's why the levels always seem to work, and that's why I trust my levels. We're in this area of demand of supply as well, so it's going to be a tough one to go long. But if we were, I quite like the pullback down to 430, 431 for a bounce and a long play with a target potentially high of the day, and maybe 436.63 is another target. Rejection area, this has got to be a good rejection area, 436 as well, 436.63. So all of this area can be considered a potential rejection area, so I'll have to wait and watch what sets up during the day. And as for bounces, I'm going to get rid of, I don't like 427 as much as I did. That was there because it's an area of confluence where we've got bottoms and tops of candles. But potentially we could watch for a bounce at 426 area, 426.35. But the area I really like to watch is this area here. You can see that it's an area of demand, big reaction. We came down, we came through this area, and we held it for a bit, and then we reacted again. Here we couldn't break through it, and we pushed down and we broke through. So I like to think that this has still got some buyers sitting around that area. So potentially if we come back down to 424 through to 424.75, we can watch for a bounce. And potentially we've got the 50 moving average, which we could be merging up with as well, so that could also act as an area of resistance. Even though I don't use the moving averages as support and resistance, but it's an area where we could see a lot of buyers putting their orders in. So, and this is the top of this area here, that's where we saw the last reaction down, so potentially we might see another reaction up. So to recap, 424 for a bounce. We kind of hit the rejection area, which I quite liked on the daily, 433.25 to 434. So maybe it comes back up there for a rejection, back down. Rejection off of 436 area, 436.60, and also a higher risk bounce. If we come down to that area, 430, but it will be with the trend, so bounce with confirmation. Okay, so looking at Qs next. Okay, so it's rejecting that level we've had in for some time. 364.50, 361.67 is a bounce area, and that'll bounce That's with the trend bounce as well. If we see a big sell-off, then similar, I quite like that area as well. 359 to 360 for a bounce. I'll just put in another trend line, so it'll be around. That's the area there. And the reason I put the trend line there was because it's the top of this gap, which I've only just noticed that, but I was really looking over here. I was trying to find the average of these candles, but the tops of these candles as well, and the tops of that pivot, and it just happens to be the gap fill as well there. So that's a good potential bounce area. 359.21. And look for rejection. The rejection area's got to be at 370. This area again. If we see a bit of a market rally, so coming up to 368 through to 370 for a rejection, that's what I quite like. I think that's it really. Two areas: bounce, rejection, high risk bounce. And we're going back to the head and shoulders theory again. If we're seeing a head and shoulders pattern setting up, this is the head. We won't know until the next few days, but potentially we may already be looking at the neckline at 361.67. And if this is a head and shoulders pattern, then a bounce to that area for potential scalp long. Like I said, it's difficult because we're so extended. We've got to look to scalp more today rather than getting. If we're down here and I was looking to go long, then we got more potential. But up here where we're so extended and we're into supply as we saw on MES, then it's going to be a difficult one. But you know, it's broken through all the levels previously, so it could just do that today. Looking at NASDAQ, we've got this nice big demand, this big supply zone here as well, so let's mark that off. And what I'm looking for is an area where we came in. I like pivots as well and topping tails, and then I saw a big reaction afterwards. So I like to take the first candle off the reaction and then the top of the previous candle. So there we saw buyers push up into that area and then the sellers took control. So that's where there's an area of supply, probably closer to that. But I'll do the, in fact I will stick to there. Because it's such a wide area, sometimes I like to try and make it a bit shorter. So we're in the area of supply right now. So if I were to find a level in that area, there you go, there's only one level I can watch for. It's got to be there. So what's that? 15,074, which happened. Oh, look at that. How close are we? Which is pretty much there. You know, I won't fine tune it because it's an area anyway. And basically, I found that level by looking at the bottoms of these candles, tops of these candles. Obviously, not the absolute top. I was just trying to find an average area, and you see it's tops of this area. So if you were to put a rectangle or a zone on that. Where's my drawing tool? This is kind of what we're looking for, that type of thing. So that is where the area would be, where we've got supply from previous sessions. I think that's it really, NASDAQ. So we've got a bounce at 14,860 area. And again, we've got this. You could say there's a demand zone. That's the best demand zone. If we can get down to 14,800, I can see a nice bounce down at this level. Got the rise in 50 moving average as well coming into it as well. So 14,800 to 14,860. So this entire area. I particularly have like this area because last time we came up to it, sellers took control and we saw this big move. I'm looking for the big moves after, and that shows you where this area is supply and demand. But you could argue that this is also a big move down and then it continued down. So we probably bounced off of that. Look at that, yeah, so we're quite close to that area as well. Let's put a level in there. And that was based on the bottom of that pivot and the top of that pivot. And it happens to be the bottom of this area we're consolidating. Okay, that's it for NASDAQ, I think. They're the main areas. oil. Are we potentially seeing a daily head and shoulders setting up? Neckline here, left shoulder, head. We'll see whether maybe we could see something like that. I'm not sure. It's not defined. It's a daily one as well. You could have a lopsided one here. Head, shoulder. Shoulder, head, right shoulder, break and retest of this level. That's something to watch for. And I quite like the break and retest of head and shoulders, but I do prefer if it's a straight head and shoulders rather than one which is lopsided. But potentially that is the break and retest of this trend line. So looking for a rejection area. Let's draw that in. Oh. I'll just put those points together. We're in a downward trend at the moment. That's the daily. Let's go into the hourly. So on the daily, what are our significant areas? We've got this area where we're at right now. It's a bounce area. We broke through and we're retesting it as well. So potentially to continue with the daily trend down, which we're seeing put in this pattern. We've retested it, touched the trend line, and we could see a bit of a short down. So it could be a high risk short if we break 82. If we break today's low. We'll have a look in the hourly in a second. And we've got a bounce area which will be at 78, and it'll be the if you can see the 200 moving average is curving around as well. So potentially if we come back down to that area, we could be looking for a break. And if we can draw our trend lines in, we can look for a potential breakout of that area. I think that's it really for oil. Yeah, we're right at this area now. This is a major area on the daily. So we've broken through it, which I'm surprised about, but then it's a zone. We could see a bounce still. But we'll go with a trend. So potentially it's broken through and it's retesting this area here. And if I were to just clone that line, put it to the top of that pivot there, and we kind of come into that area as well. So this entire area, that zone, is a rejection area. So potentially we could be looking for a short down to 78. That's probably all I'd watch for. Okay, and last but not least, gold. I've been trying to trade gold, but I find it difficult to day trade. Well, you can see why. It's just been sideways for the last month or so, half a month. Still got this area on watch. I was watching this pivot for a break yesterday, and today it's broken it. Come back down. But I want to go long probably as a swing trade gold, but I'll only want to go long if we can break out over this area. I want to see it break, come back, and then get my entry for the continuation. If you look at the daily, you can see a bit of a squeeze going on in this area as well. So, and volume wise, we've got condensed volume as well. So as we eat time off the clock, it's like winding up a elastic band. Eventually it's either going to break or it's going to push up, and the longer we eat time off the clock, the bigger the expected move is going to be when it finally breaks out. That's what we're going for, so hence why I want to keep an eye on it. I may consider going long if we come back down to 1978 area, as we did there, and we did it a few times, and use the stop, which is the point of control as well, at 90, that pivot as a stop area, just to try and get an early entry in case we do see a big explosive move up. But the more conservative approach will be to break, wait for the move up, and as it comes back down, then get the entry. Look for basically a pullback, get in on the change of trend. So this is an area I'm watching for as well. So there's nothing else. I'm not really watching it on the daily, but we'll have a look at the hourly to see if there's anything Well, we can already see our rejection zone up here. We're putting in, do the trend line instead. There we go, so a bit of a downward trend line. We haven't quite touched it yet, but inverse head and shoulders there, neckline. Could come back and test that neckline for the long, upward 200 moving average, pausing, having a break, and then maybe continue the upward trend. So maybe if we can get back down to this area, it's not far off where I wanted to get in anyway, 1997, could see a potential long play on the hourly. So I find it really difficult. You can tell, look at all these bottom tails and topping tails on the hourly. That's why I'd rather wait on the daily. If we get back down to this area, then I'm probably looking to go long on gold, as on the ETF gold rather than the futures gold. So, but I'm keeping an eye on this anyway. Okay, that's it really. 5 minutes until market opens. Quick recap, see if anything changed in the last few minutes. Not really. So we're in an area of supply. We're looking for a rejection at 43.77. That's the preferred rejection area. Otherwise, 43.67 is another good rejection area, and we can use this pivot, and we can use that as a stop loss as well. Just put the stop slightly above. Yeah, I think that's the area. And like I said, if you look at the volume as well, you can see it on the daily one. You can see a decline in volume as well as we're pushing up. So it looks like we're getting exhausted on this move up now, and you can see that clearly in the daily. So volume's declining, especially in the, well, we've got low volume since we started this push up, higher volume on the push down, and yesterday was even lower volume, and that was the biggest candle we've had for a while. So bigger wide range candle, much lower than average and much lower than the previous red green candles. So I think the energy is being lost on this move now. But play the chart, not play the biasness, and I'm going to try and play for whatever direction the market wants to go. Okay, thank you for watching, and don't forget to hit the like button, and that helps the algos on Google to get this video discovered. And as you know, we love algos. If it's not for algos, we wouldn't be having this volatile market as well. So embrace the algos. Thanks for watching.